Welcome. This stream is gonna be a little bit different. It's not gonna be the normal stream. Typically, I don't go live on Friday nights. Just take a break. But I figured instead of really, usually what I do on the weekend is I just make a video to put out on Saturday. But instead of doing that, I just figured might as well try something a little bit different. Mic might be a little bit loud. Let me put that down. Put that down a little bit. Really, the point of this stream is I'm just going to be answering questions for everyone who is deciding to show up on a Friday to improve their skills in trading, to put in the work when the market is not open. I'm here to help those people out. So yeah, basically I'm just going to be answering questions you have in chat. For whoever is here, I'm going to be giving you everything I got. So I hope you enjoy it. I'm going to try and answer as many questions as possible, hopefully all of them. Yeah, I know it's a Friday night, so it's going to be a quieter stream. That's just how it's going to be. But as I would normally do, just a quick recap of the week in the market. It was pretty good. Wasn't insane. Moderna and OPTT were nice gainers. Other than that, it was just pretty much solid gains on everything except for like 3 trades. So only 3 trades are down, and then 2 of those 3 trades were only down 1%. So very just consistent week. Nothing like absolutely crazy like the other weeks, like with some crazy profits. I mean, Moderna was a nice confirmed target, but just a solid week all around, just compounding profits, moving on to the next one. You kind of get the point there. And yeah, I'm just going to be heading into the charts. If you have any questions about literally anything trading wise, I'll try to answer them. So drop questions in the chat, hit that like button, subscribe if you haven't already, and let's get to the charts. Alright, so looking at the chat right now, Hassan says, what catalysts to use and how do you find them? In terms of catalysts, it really just depends. I think, obviously the most common one, which is because it has to be a catalyst every quarter, is just quarterly reports, right? Earnings. How you doing, John? But yeah, I'd say the most common catalyst is just that, but also there's mergers, there is product news, like an Apple event, a Tesla event. There are partnerships, filings, right? Like insider buying. There's just a lot of different catalysts. I don't think it matters on like which ones you use. You can use any catalyst, but the most important thing to see is like, how do people react to catalysts, right? Because there's been companies in which have had technically on paper, bad earnings, like revenue wise, but they, achieved another milestone that looked good. Like for example, like Netflix, I believe that they were a little bit short on their revenue expectations, if I'm not mistaken, but they increased their user base, right? So they got more users and they saw a very nice day. I think it was not today, but yesterday maybe, it might have been the day. So yeah, when it comes to catalysts, in order to find them, there's a lot of ways you can use like an actual website. There's Bloomberg Terminal, which costs a lot of money to use. You can just use CNBC, keep it on your TV all day. You just need to have some sort of source that is very, very reliable over many years. You need to have a good source, and you need to also have a quick access to that source, right? As in having like pop-up notifications on your phone and email, whatever it is. Even just having a nice following list on like Twitter can help, right? If you're following CNBC, Yahoo Finance, other things like that, checking out Finviz, TradingView also has news. So just always keeping tabs on the news. Hopefully that answers your question. But social media is really an underrated way to get those catalysts very, very fast. If you just, you go on Twitter and you look up tickers, right? Can you elaborate on day trading rules on a cash account? So I think with in all cash account, there is no PDT. I might be mistaken, but I believe it's just you have pattern day trading if you have a margin account where you're able to use money that's not technically your cash from the brokerage. So yeah, I mean, the way that PDT works, and I don't know if this is what you're asking, but basically, I guess it's like a law in which like if you're using an account on margin, that's not a cash account, you can only have 3 day trades within 5 trading days. And I don't know exactly why. That might just be to keep the market a little bit more stable and maybe to protect, newer traders in the market from over trading. It's probably a whole bunch of reasons for it. But yeah, I think on a cash account, you should be good to go. I don't think there's any issues. There's a lot of ways that people, I'd say the best way to get through PDT is just to actually have a good account, trade correctly, right? compound your gains, and be patient. It's going to take some time. Be patient if you're starting with a lower amount and trying to work that way up to the PDT 25k zone. Just be patient. There's other things that people do, like cash accounts. You can do that as well. It's just going to take a little bit longer. And then aside from that, you could just have different brokerages, right? You can have a Webull account, a Robinhood account, a TD Ameritrade account. The only thing is, like, you have to spread out your capital and to put them into those multiple accounts. So that's just how I would kind of answer that question. But yeah, we got like 15 people in here. If you have any questions, let me know in the chat. Probably not going to be a super long live stream, just however many questions we get, I'll try to answer them. You can give me the toughest question you want, a simple question, whatever, wherever you are at as a trader. Just any question, anything you want to know, I'll try my best to answer that based on what I know. But yeah, I'll be looking at the chat. If you have anything, feel free to let me know. Right now I'm just looking at Bitcoin. It's interesting, right? It had a nice rally. There was actually today earlier, there was a 4-hour hammer candle on Bitcoin. And then again, this is just more trading knowledge, I guess. This hammer candle, yes, it's a bullish candle, but why? That means within a 4-hour time period, you came all the way down on price, but the market participants were not satisfied with those lower prices, and very, very quickly demand came in to bring you back up to higher prices, right? Very fast. And this is the follow through you got after the bullish hammer on Bitcoin. Yeah, we could take a look at Tezos. Should be on my crypto watch list. Well, Tezos is actually going crazy right now. It is up 15% in the last 2 hours. So, I mean, great stuff for Tezos. It looks like it is breaking out right now. You have a resistance right here at like $3.52. If you break that, almost $4, and then on top of that, pretty much the Coinbase all-time high. I think that might be the actual all-time high at $4.49. So Tezos is currently working on a breakout for sure. This orange box, 1, 2, 3, 4, 5, 6 times Tezos could not break out of this orange box, and right now it is. You still have to wait for confirmation, but for now it's going crazy for sure. Very, very interesting, the correlation between Chainlink and Tezos, right? Where Chainlink just made another new all-time high, and then shortly after Tezos is following. They do have some sort of correlation. It's pretty interesting. WNW, we could take a look at that. Renamed to Bezos. Let me go back onto my other watch list. But yeah, I'm fine to look at tickers. Mainly what I want to be doing for this stream, and I don't know how long this is going to be. I'm just trying to see if this is something I should start doing or not. But just really trying to, answer like more trading type questions to just help people develop their trading abilities, right? This one, there's not enough data on the chart for me to really do anything with. It's just way too new. I don't know anything about the company fundamentally, so I can't really help you out there. Patrick says, what do you think of GameStop? You sold out to take profit. Do you think the trading halts had an effect on the run? Yeah, trading halts are interesting because prior to trading halts, you have just a lot of people staring at the price of a stock, either buying it or shorting it or just staring at it. And then when you get the halt, you could get a change in momentum or a big continuation, right? Basically, the halt just gives everybody, however long that halt is, it gives them some time to just sit back and then rethink. If they were FOMOing and then the price gets halted, maybe they think, okay, it might be time to take profit. On the flip side, maybe if they were waiting for an entry and then it got halted, they're like, okay, the second this thing opens back up, I'm buying it, right? So a halt is just really, I don't think it really has it always has a different effect, right? It could be good or bad. But, so yeah, I don't know how to really answer that. In terms of GameStop, I have no clue, right? I mean, we were talking about GameStop in the stream when it was $11. I was saying it was bullish down here. Literally, you can go back on my stream, like back in right here. In the beginning of November, I was covering GameStop, showing the demand line, the accumulation that was going on, how it broke out, and it went up like 600% since then. This is like really where you want to be entering, and I'm not talking to you because obviously you took the profits, right? But like, I mean, sure, I mean, taking profits on GameStop would not be, I'm not going to say not a question, but like, you can't blame anybody for taking profits on something like this. How do you use the Fibonacci properly? Okay, so let's just find a good chart to use. Probably not this one. So when it comes to actual fibs, the first thing you want to be looking for is swing highs and swing lows. Let's try this out. Okay, I'm going to clear up this chart. So a swing high means the place that the price went all the way up to before falling back down again. And then a swing low means the place that the price went all the way down to before going back up again. So when you're looking for Fibonacci levels, you need to know what the swing high and the swing low is. It takes time to be able to just like eye them. But you know, eyeing this chart right here, I'm gonna make the swing highs all red, or I'm gonna make them all red. Okay, I'm gonna show you where all the swing highs are. Okay, I'm gonna put a red circle on all of the swing highs that I see. Okay, and I'm gonna put a green circle on all of the swing lows I see. So I hope you get the point here. Let me actually make this one red. Okay, so the red circles are swing highs, the green circles are swing lows. And what you're doing for Fibonacci, if you're looking for a buying target, you're going to be going from the previous swing low to the previous swing high, okay? So I'm using this swing low, this is where I'm going to be starting my Fibonacci. Then I'm going to my swing high up here, and then I'm going to be extending it, okay? So pretend that this move didn't happen yet, right? Let's move this over a little bit, okay? So this is your swing low. Do you see that the stock came back down to the 50% retrace, and that's where it really bounced off of, okay? So you're using this swing low to this swing high to get your buy target at the 0.50 retrace. You even had well, not really. You had a nice MACD over there, kind of some local divergence going on. So that was like your buy signal using Fibonacci and the MACD. So that's how you would use it for a buy target. In terms of using it for a sell target, you go from the previous swing high to the previous swing low. So you go from this swing high right here to this swing low, and then all of these Fibonacci levels can be resistances. Your next one would be the 100% retrace, then the 1272, 1618, 2618, and so forth. So that's Fibonacci. What do I do outside of stocks? YouTube, full-time college student. I box a little bit. Used to play video games. So we used to play video games, Resistance, you know that. And yeah, I'm also into marketing, but haven't really done too much like work lately. Just been really, my life has been evolved. I don't know how to put it. Like I've really just, this has been my main focus in the past few months. But yeah. TV Repairman Man says, at what level should we look out for if we are in calls for a stop loss? I have $50 calls expiring May 24th. Long time, I know, but since earnings are coming up Feb 2nd and a dividend sell off at March. I mean, in terms of like call option stop losses, usually what I personally do is I have like two things. I have a plan going in, which is how much I'm willing to risk on these call options financially. And then two, also just like an actual stop loss on the price. So if it goes down to my actual stop loss on the price, which would be a couple percent under a support, I'll stop out of my options. Or if my options go down a certain dollar amount in which is too much, or is it getting to the point where I don't want to be risking that much more, that's when I stop out. What else? Forge said, put $500 of pocket change into GameStop at 2 complete, forgot about until you opened your TD account for the first time. Wow, so you forgot you owned GameStop at $2? Congratulations. Yes, that is correct. The 50% retrace is not Fibonacci, it is Dow theory, basically a half sale. I talked about that in my course that I put out on my channel. It just, TradingView does include it on the Fibonacci levels. It's saying that I just got a $20 tip, but it's not popping up on my stream. It might be taking some time here, but I think the Bodhisattva, if that's how you pronounce it, I'm sorry if I mispronounced that, I truly apologize. But Streamlabs is saying just send a $20 donation. I'm not too sure. It's weird, why is it not popping up right now? I see it in the chat, but it's not like showing on the screen. Not too sure if you did send the 20. Thank you very much. I don't know why it's not processing right now. Let me know in the chat. So you did. All right. I really appreciate it. I apologize for not showing up. I have no clue why. Should be showing up right now. For sure though. Vibes for you. Thank you again for the 20. Really appreciate the support. Do you always go from left to right when using fibs? That one, I mean, people typically you're going from right to left when you're looking for the sell targets, and then you're going from left to right when you're looking for the buy targets, right? So right here we're looking for a sell target, so we're using the previous swing high to the swing low. So you're going from left to right, sorry, from over here to over here. And then it's just weird because over here then you're doing the opposite thing, right? So I guess when you're looking for buy targets, you're technically going from left to right on both, right? Because you're looking from one low or one high to the next one. It gets confusing to think about it. I just kind of like eye it, right? So from here I'm going from up top to the bottom. Then from here I'm going from the bottom to up top. What else? Resistance and support, quick tutorial. Sure. So when it comes to resistances and supports, the simplest way to put it is you're looking for a place in which the price is constantly failing to get above or constantly bouncing off of, okay? So looking at this chart, just eyeing it, you can see over here you've had some support. We could just chart it like right there, right? Look how many bounces you had off of this 74, 77 level. 1, 2, 3, 4, 5, 6, 7, 8, and then on your 8th bounce off of it, you had a very big run. Then in terms of resistance, this is not the best chart for it. Let me see if I can find something a little bit better. I need something in a range. Right here, okay? So then a resistance is just a place where the price continuously fails to get above. So for example, on JPM, resistance, couldn't break above. When it did break above, it had a nice run to the next resistance, the 200-day moving average, resistance. So that's one way, the horizontal way of resistance. You can also use Fibonacci for resistance. If I'm using the Fib extensions here, wow, look at that. I literally just eyed that, okay? So I'm using Fibonacci, right? Let's really zoom in here. I'm going from this swing high right here to the next swing low, right? Then we scroll up and look where JP Morgan reversed at the 4.236 Fibonacci resistance. So you can also use Fibonacci for that. You can also use a pattern for resistance, right? Let's say you have like a rising wedge or something. This is not going to be like perfect, but as you can see, kind of, I don't know, I'm kind of just eyeing this, but technically this was a bearish pattern, but it actually broke to the upside. Every single pattern, even if it's bearish or bullish, can do the opposite thing, just depends on which way it breaks out. This one, look, you had a resistance at this top line. Once you broke it, you had a very, very crazy run. So there's that. Yeah, resistance and support is like the fundamental of technical analysis. That's like the core of technicals, right? That's the most basic but most important thing when it comes to technicals. You always want to have a support near your entries, just so you have something to manage your risk off of. So the resistance line doesn't have to line up exactly, just in the general area. Yes, that is correct. You could get like, you know, just like the general area, like right here, okay? So for example, on this one, you could try and put a resistance line, you know, right here, right? But you could see like it didn't even get all the way up there on this one and on this one. So you could just make something like a box, right? Where you have like a box of resistance, right? It could be a range, right? Because it's just based on supply and demand. You could see supply a little bit earlier, like how you did over here. Appreciate the support, Lars. Kodak to the moon. Mitch Ray was looking at Kodak on his stream tonight. He liked it quite a bit. MACD Island, should you include all of them when looking for divergence? Most of the time, yes, but sometimes the very, very little islands don't matter. Like something like this, I really don't care about, right? Maybe you could use it if there's nothing else to use. but most of the time you're just looking for like the bigger islands. At the end of the day, the bigger islands just give you more probability because there was more data in those islands, right? There was more data being developed. Explain some of the different Japanese charting patterns, dragon patterns. So I don't know if you want to talk about Japanese candlesticks or anything else, but like there's like different candlesticks like the doji and stuff like that. They all have their different meanings. That's in my course though. I believe, yeah, they are in my course, yeah. So if you go to playlists on my channel, I have a full free course that'll explain the candles. In terms of the dragon pattern, we can definitely, I think of one right now. I think Bitcoin had a dragon pattern way back down here. Mitch Ray also showed that on his stream. Where was it? I really don't want to delete this Bitcoin chart, so I'm gonna make another one. Let's just use, I don't think I've ever used the Gemini chart. Okay. So we're looking for right over here. I think that was it, right? Yep. So a dragon pattern. Oh, there was also one on Wendy's. A dragon pattern. All right. So on a dragon pattern, if you look it up, they're going to give you very, very specific, you know, Fibonacci anchor levels, pivot levels. At a bare minimum, a dragon pattern is just pretty much a double bottom with the supply line. Okay. Right. So we're looking at this as the dragon pattern. Where let me find it. Okay, so right over here, this was your first bottom, then right next to it, that was your second bottom, right? And then this was your supply line. Pretty much, you could probably just do it like this. Okay, so this is your dragon. Now why does it look like a dragon? These are like, let me just draw it out for you, like this, right? So this is like the neck of the dragon, this is like the spine of the dragon, and then these are like the dragon's feet, I guess, right? So this is like the dragon right here. It kind of looks like I don't know, it looks very weird, I'm sorry. But that's the dragon pattern. I'm terrible at drawing, so, and especially with the mouse on TradingView. But yeah, just a double bottom with the supply line. Look what happened when Bitcoin broke out of this dragon pattern. That's what happened. Now, listen, at the same time, this was not really only because of the dragon pattern. The dragon pattern did act as like a nice technical continuation, but there was a lot of fundamental reasons for the Bitcoin run. Dinosaur pattern, whatever you want to call it, you get the point of it. Pretty much just a double bottom with the supply line. If you really do look it up, they're going to tell you to look for like a very specific support, like a Fibonacci level. They're going to want you to do something like this and then go like something like there. Like you can if you want to be super technical, but you don't need it to be at those exact levels. But this is the simplest way to put it. I don't want to overcomplicate it, and I really only use dragon patterns like that. Super simple. An XABC pattern, XABCD, and how to validate a cup and handle. Yeah, sure. So I guess we could just use Fisker for this one. So when it comes to harmonics, right, really what they mean or what they show is a series of pivot points based on Fibonacci. So basically, you know, whoever created said harmonic was assuming that after certain Fibonacci retracement levels, the psychology of buyers really can change, okay? So after you have a nice run up and then you go down to a 78.6% Fibonacci retrace, then you have a little rally after that, you can dump. And on that dump, once you reach the double golden ratio or the 1272 or just the golden ratio, the 1618, once you reach that pattern completion zone, it was such a it was such a dramatic drop down in the price that at this golden ratio or double golden ratio potentially, there could be an insane amount of demand coming in. And that is what you saw here on Fisker, where it more than doubled in price after hitting that pattern completion zone. So there's different types of harmonics. I'm not a harmonic expert at all. I know how to chart them, but I do need to have a cheat sheet next to me. I just don't have them, like, I don't have all the exact numbers memorized in my head because there's like 10 different harmonics with all different numbers. So I do use a cheat sheet if I am thinking I see something like a harmonic, but there's different types of them based on different levels. And you can use them for bullish scenarios or bearish scenarios. Like a bearish one could be something like this, right? Where you go like this, then like this, and like this, and like this, and then you go like that. And then when you get to that fib level, it could, well, I just clicked on the wrong thing. When you get there, it could dump. So yeah, you can use them for both sides, and they have different pivot points and stuff. And then could you show how to validate a cup and handle? By validate, do you mean like confirm a breakout? I'm trying to think of a good cup and handle to use. There was one that was a trade. Why can I not remember it? What was the cup and handle? It was hum, maybe? No, it wasn't hum. Oh, I can't think of it right now. There was a really, really good example of one. I might just have to go and find this. There was a trade that was like a perfect textbook cup and handle that I put out. It was sometime back. APA is an okay example, but there's a better one. If I can't find it, we're just going to use the APA chart. I really want to find this one though. It's just bothering me. I need to find it. Oh my gosh, look how many trades I put out. This is all since like December. There we go, I found it. No, not that one, I can't. Alright, there we go, I actually found it, ILMN. Alright, so this one right here. Yeah, APA had one, it was okay, but I mean, it's still kind of technically developing. This one is perfect. This was a trade, okay? This was a perfect cup and handle. This was an official trade that I put out. It hit the target of the trade very, very nicely. So on the cup and handle, you have the rounding bottom. Now what does a rounding bottom mean? It means that it was super bearish right here. The sentiment of the stock was bearish, where it was dropping very quickly. And then, you know, in this rounding action, and it wasn't perfect here, so I guess it could have been more perfect. But you were getting this rounding action, which means very gradually and consistently people were becoming more neutral on the stock price. And then very, very quickly, they were also becoming more bullish. So bearish, 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 neutral, 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 bullish, bullish, bullish. It's showing the psychology of the accumulation levels of the stock, right? Then you get your cup and handle. Then you get your handle, I mean, which if you really read technical analysis books, the best handles, believe it or not, are the very shallow ones where you only handle for like 3 or 4 days. I'm not even joking, like literally you handle for like 1 week, okay? Just because that shows that the stock was so bullish that the bears really couldn't even get it down that much for the handle. They got it down a little bit to make a handle, but they couldn't get it down that much. And then in terms of validating them, the neckline, you always want your cup and handle to have a very clear neckline where you know that if it breaks that line, it's breaking out, right? You don't want a cup and handle. So this was your neckline on this one, right? You go from the left side of the handle to the right side, and you were seeing this resistance at $350. But yeah, so that was like your breakout level. The second you broke out, it just went on a tear. That's how a cup and handle works. So I think I think 400 bucks was like the target of the trade. I don't want to scroll back through the whole entire list, but you could find it. Fab with the $10 donation, small donation to keep you motivated and keep putting out great trades. Thanks for answering my questions. Thank you for the support. Yeah, I just wanted to show up, you know. I'm not going to be somebody who's only going to be here just whenever I feel like it. I want to be consistent with the schedule to give as much as I can, you know. So thank you very much for $10 and the support. Appreciate it a lot. But yeah, on the cup and handle, you want it to be just a very clear breakout. Because sometimes you're going to get something like this, where like, and people are going to call that a cup and handle. Like, you know how hard it is to break out of something that has an up-sloping neckline? I would even prefer to have a down-sloping neckline. It doesn't have to be an even neckline, but I do prefer those the most. Appreciate it. Is HIK forming a cup and handle? Forge says your girlfriend took your FTM hoodie because it was so comfortable. I love to hear that, man. I still haven't gotten my hoodie. Come on. Because I ordered the whole entire collection, so I guess they might be trying to, you know, like maybe ship it all at the same time in one package or something. This is not really a cup and handle, if I'm being honest. It could have been, right? It just didn't turn into one, right? And another thing that Mitch Ray also talks about is that it's not the pattern itself or the breakout itself that matters. It's the price action that you get from it, right? So just because you have this, cup and handle right here, which probably would have been like that, just because you had this, cup and handle, the white stuff, the white lines, did it really matter? Just because you have a pattern, that doesn't mean it technically matters. What matters is if you can use the pattern to make a trade. On this one, you were never able to get above 2,700. And then instead of breaking out of this cup and handle, you just went sideways in range. So it was like a rounding bottom into a channel. That's kind of what it was. You had this rounding bottom where it was bearish, 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 neutral, neutral, bullish, bullish, bullish. Then it had supply here. That means people wanted to sell it here. There's a sell wall at 2,700. And then it went sideways since then. It's been sideways since then. So now this is your new pattern on that. Just going back to APA, because a couple people brought it up. Where is it? Right here. So yeah, APA, another example, right? This is pretty much a cup and handle. It just underperformed, like how I just talked about. I mean, it did have a nice start, but technically on cup and handles, it should have a much bigger run than a 15% run, okay? This was a major cup and handle. It should have had a much bigger run, just didn't. So like I just said, it's not about the pattern or the breakout itself. It's about what that can give you after it occurs. On this one, it just, I don't know. It almost hit the short-term target, right? I put out the trade right over here. At one point in the trade, it was up 15%. I believe I did take profits on this trade up a little, like around here. It was up 15%, but then I don't know what happened. It said they have a dividend. It said that they had a dividend, so that may have been the reason why, but I don't know how reliable trading view is for that. And then it just got very close to the short-term target. It was up 15%, and then it just pulled. It just dumped. I don't know. And now it's just trying to find support right there. What would you look for to enter the trade price activity-wise? I'm not sure what you mean by enter the trade price activity-wise. Am I looking for a spike in volume? I personally actually like entering when the volume is low, if that kind of makes sense. I like entering when people are being very quiet about a stock, when nobody's really giving it attention, when it's in that accumulation range, going sideways or dipping a little bit before that big volume spike. Because one thing that you can, really see on stocks is they have breakouts on volume, right? Where the volume is just steadily going down until it gets like a super minimal level, and then a few days after you just get a huge spike. So I actually like getting in before the spike, just because technically on the spike is when you get that big move, right? Because you need a lot of volume for those big moves. So if you're a breakout trader, you could look for the volume spike, and that's what most breakout traders look for. They kind of verify their breakouts based on the volume of the breakout. But for somebody like me, I like entering way before the breakout, right? Let me think of a good example. Like right here, Vroom, the first trade on Vroom, okay? I'm not talking about the current trade. Right here, when Vroom was showing this support level, right, is when I wanted to enter. This is when I was entering, and then you got the big volume on this candle right here off the demand line. You fell back down a little bit, volume went back down. I think I even added to my position. You had the little signal, then the volume went down right afterwards, and then you had that increase in volume right here on the move up, and then that led to a lot of fall through price action. And that's why I'm not saying you can't be a breakout trader, but the thing with being a breakout trader is that there's literally statistics that like half of the time you get false breakouts. So if you're buying on a false breakout and then it goes all the way back down to the demand line of the pattern, you're just not in a good position. But if you enter way before the breakout, you're just sitting back and letting it do its thing. You're letting it either break out or not break out, if that kind of makes sense. On Clove, yeah, I can look at Clove. Not much has changed. I actually got some more after hours today. I put out a tweet. It's just still, I think this is a good level unless it breaks, and that's why you manage your risk. Right now, it looks like a good level to me to be entering because it's over a support level. It's developing some daily hidden bullish divergence on the MACD and the RSI. It's at the golden retrace. Again, it's very quietly decreasing in volume, and I'm trying to get in before a potential big move to the upside. I also like the company fundamentally. So, you know, I'm just trying to scale into it. You could look at it as like a down sloping channel, but it's really just in between 1320 and 1420. If you fall under 1320, that's bearish. If you break over 1420, that's bullish. It's tried to break 1420 like 5 times this week. Every single time it couldn't hold above it. Even today it tried to do it. So it's gonna break one way or the other. Hopefully it breaks to the upside. But if it doesn't, that's why you manage your risk, and you're only gonna lose a little bit if it doesn't break to the upside and it breaks to the downside. Okay. Do I recommend Fisker warrants? I don't know too much about warrants, if I'm being honest. I know they kind of work like options, but it's a little bit different. Let me go back into full screen, sorry. I'm gonna answer all your questions in a second. Always seeking. I know you asked some questions yesterday. I was just super tired. Apologies on that. But again, the best place when I'm not this is a very special. This is the first time I've ever done a question and answer stream, so you're in the perfect place right now. But typically, I'm just working every single hour of the day, and I don't really have time to. So the best way to learn, aside from this very rare stream, is by watching my course, which is on the website. And then also, and it's on my YouTube channel, and also just joining the Discord and asking other people in Discord. You have almost 1,000 people asking Discord whenever you want. So that's the best place to be learning aside from this very unique stream. Hopefully I'll do more of these soon. Yeah, on the warrants, they don't really correlate to the price very, very real time from what I've heard on Fisker. So it's just a lot of weird things that go on. They could make you much more money. They could make you lose more money. I think they increase your volatility, just like options. Let me skip that song. Always Seeking says, can you show how we can tell what your stop loss amounts are when you put your trades? Yeah, I put out a couple of tweets explaining this. I even made a graphic. I put it in the Discord, I put it on Twitter. But if you're newer to the stream, I'm gonna make you 3 circles, okay? I'm gonna make a red circle right over here. I'm going to make an orange circle right over here. And I'm gonna make a green circle right over here. The red circle is, I'm gonna use quotation marks here, okay? The red circle is the stop loss. The orange circle is the entry, and the green circle is the target or the take profit level. Now, why am I putting quotations on that? Because it's all up to you. All I'm doing on these risk to reward levels that I show is I'm basing these levels not on risk tolerance necessarily, primarily, but I'm basing them on support and resistances, okay? So the entry is right on a support, right? Previous resistance turned into a support, that's the entry. The target is based off of this little resistance, right? If we really zoom in here, and it's kind of hard to do it on a chart with less data, but if you go to my other trades, you're gonna see the same thing. I'm putting that target right next to a resistance, right under a resistance, so you can get your order to fill. And then the stop loss is just a little bit under the support, right? So here it's about 4% under the support. It depends on the trade. If you want to have your stop loss 1% under the support, go for it. If you want your stop loss 8% under the support, wouldn't recommend it, but go for it. Oh gosh, I don't remember what it was. Let me just undo everything. I think it was like that, yeah. And if you want to take profits early, go for it. Really, these are just based on technical levels, and really what I aim to do on them is give you a good reward to risk. I actually need to change this to 5. That's a 5 reward to risk. So what I'm looking for in a trade is that between the entry and the target, it can give you a good reward. And between the entry and the stop loss, you won't be risking that much. And then I want that ratio of risk and reward to be a 3 or higher, typically 99% of the time, unless it's like a super bullish chart. That's another thing Mitch Ray taught me. You want to be potentially standing to gain 3 times more than you're risking. And this one's even better because it's a 5 reward to risk. If you're going to like 10, 20, I mean 20 is like insane, but like if you're looking at like a 10 or more reward to risk, that's a little bit unrealistic for the most part, but again, it's a very big bull market right now. So typically I just go from like a 3 to 5 reward to risk so I can actually take my profits. If your stop loss is that close to your buy, then why do you make the red box so much bigger than the real stop loss? So if your stop loss is that close to your buy, I'm so confused. So the red box is just showing you, so the green box from this orange circle to this green circle, this whole entire box means that you're in profit on the trade. If it's in this green box, that means the trade's in profit. If it's in this red box, what is that song? If it's in the red box, that means that the trade is in a loss. Now the trade is in profit, and then at the end of the green box is when it's like the final take profit based on the technical levels. And then on the flip side, when the trade gets all the way to the bottom of the red box, that's like the final stop loss. Based on the technicals, it depends on you. I can't completely, just straight up, tell you exactly where to buy, sell, and whatever. I've never once told somebody directly to buy or sell a stock. I'll give you a resistance or a support level. That's the most I can do, but that's always your decision. Not sure if it's been asked, but when looking at divergence, do you look at the peak of the histogram and move directly up to correlate with the price? You look at the peak of the histogram and move directly up. Yes, but typically they always line up regardless. Like for example, typically whenever your peak of the histogram occurs and then you start waning is when the price always will also go back up. Now why do I say that? Because for the price to be waning, for the MACD to be waning, you have to be you have to see some demand most of the time. Sometimes you can go sideways and your MACD will be waning, which means waning just means that it's moving back towards green a little bit. But typically it just always happens around the same time. But yes, you're looking for your MACD island to be lining up with the swing low, right? So this was a swing low right here, and then this was a swing low right here. It's not perfect hidden bullish divergence because you kind of had the same level, but that was on a lower level. So it's kind of like there's different classes of divergence. There's class A, class B, class C. I don't know if there's a class D, but it's a different class of divergence. Let me look at Smile Direct Club. I'm not really going through ticket requests on this stream just because I'm trying to make it more educational, but ironically, Smile Direct Club was the first stock I ever bought, ever. It was, I think it was $6.81 or something like that. I don't remember how I remember that. It was literally on my birthday. So I bought it around here at $6. I sold it up here at like $9.60 or something, around this resistance. Right over here is when I sold it. That was my first ever trade. I made like 40% on my first ever trade. That was when the stock market was really just pumping after the COVID crash. And at this point, deleting all of that looks a little bit concerning to me. The macro pattern, at least. I'm not talking about the short term. And this was actually when I actually bought Smile Direct Club. It was not even technical, it was mainly fundamental. I actually just like the company. I like their plan a lot. I think that in the future, direct-to-consumer orthodontics is going to be a thing. I don't think that you're going to need to go to an actual orthodontic center to get your braces done. I think that they're just going to give you the clear, better-looking braces, ship it to your house, you throw them on, and you wear them. So I like their model. They also have a lot of retail locations for I'm not too sure what, but they also have that. Kind of looks like a Head and Shoulders to me. And all you need to do here is get back above 11.12 and close the day over it. So you need to get a daily candle close above 11.12 to feel better about it. But oh wow, it looks like there's like a demand line on the chart. Look at that. Wow, that is it. Oh my gosh, that's probably like a channel. Sometimes all you gotta do is zoom out. Maybe we could look at it like this, okay? Let me delete literally everything. Let's look at it like this. I'd say yes. Looks like a channel. It's not perfect. You could really just anchor like this. I'm gonna do it like that, okay? Looks like it's just in the upsloping channel, and now it's actually at the bottom of it. So if you're looking at it like it, so we could just chart this level regardless, right? So how would you manage your risk here? You probably, even if you did enter here, your target would just be like, you know, the next resistance, which is literally right there actually. I mean, there is one up here. I'll actually raise it to there. Okay. And then your stop loss would be just below the channel. So to break under the channel, you would need to come down to like 1031, put a little bit under that. 1013. It is, you know, you're risking, you don't get the best reward to risk though. So hopefully what you'd be aiming for is like a better entry where you can get that 3 reward to risk to be shown. But just remember, the only thing is that you're risking a potential head and shoulders, so it just kind of gives you mixed variables. But I do see how in the macro it looks interesting. Habitat says, how do you go about having a bad week? For some reason, I just was not being smart this week. IDK, why just one of those weeks? But your mentality when it happens. I'm gonna be honest, I also was not great at trading this week. The trades themselves did okay. Even last week as well. Last week and this week, I really prevented myself. Like I costed myself. And why? Because I wasn't sticking to my plan. I was a little bit reckless with my positions. I just wasn't listening to my own advice. And I'm very honest about this, right? So how do you go about like the bad weeks, even when the things that you were trading did well and you didn't do well because you traded them incorrectly, or you just can't find a good stock to trade and every single stock you think looks good just drops in price and it just feels like everything in the market is against you. Trust me, I've been there. The main thing that you have to remember is that there's 2 main things, okay, in terms of like the psychology. One, you're always going to get another chance. The market is not going anywhere. The market is going to be opened next week, the week after that, and forever, right? Until, I don't know, a meteor hits the earth or something. I don't know. Market's always going to be open. So at the end of the day, no matter how long it takes, you can always get back to where you once were. Even if you had a bad week, you're going to be able to get back there if you just stick to the plan, compound your gains, and be patient, right? Just because, you know, you lost 20% in a week of your account doesn't mean the next week you have to get that 20% back. And then in order to do so, you might be risking even more to try and gain that money because you're doing high risk, high reward trades. No, just give yourself a few weeks to get it back. Just remember, it's all about patience. It's not about where your account is in 10 days. It's about where your account is going to be in 10 years. That's what you need to be focused on. And then the other thing is just remember, you can't be a perfect trader. Don't try to be a perfect trader. Honestly, the best traders are good at losing. Remember that. The best traders in the world know how to lose correctly. They know how to really not take hits when they make a mistake. They know how to accept their mistakes and move on. So learn how to lose as a trader. Other than that, there's one more thing I wanted to say. I can't think of it right now. You can always get another opportunity. Learn how to lose. Don't rush things. There's one more thing. I really want to say this one. What was it? It was in my mind. If it comes back to me, I'll try and think of it. I don't know. There was one more piece of advice I was going to give you, but I was just spitting out so much that I just kind of forgot. But yeah. Do you have a TradingView tutorial? I definitely do. It's on my channel. If you go to my trading course, it's at the bottom of the trading course. It says how to set up TradingView and manage your risk. Let me just try and pull it up. Okay. So, bring it over here. All right, let me actually flip over to the other screen. All right, so I have a full trading course on my channel. This is why I typically don't spend too much time doing education on my normal streams, because whenever people ask questions, I can always refer them to this. But if you want to learn about the basics of trading, what stocks and cryptos are, candlesticks and support and resistance, patterns and charting, the psychology of trading, Fibonacci, examples of technicals, MACD and RSI divergence, and then what you just asked, how to trade with less risk management, and then also setting up your trading view. And then finally, how to swing trade, my full trading process from start to finish, just kind of like a recap of everything. This is on my channel if you go to playlists. You can also go to freetradingmovement.com. The link for this is in the description. Then you go to education and it's right here. So that's where you can access all that. But yeah, for everybody who's in here because they want to learn more, if you have not seen this yet, definitely watch it. 10 videos, about like an hour and a half long overall. And within an hour and a half, I promise you, if you put in the time to really pay attention, your whole entire mindset of trading and your abilities can change within 1.5 hours. Imagine if you just put in 1.5 hours, how much money that could make you over the next year. So I spent a lot of time trying to make these very direct, concise, but also specific, trying to compact them, because who wants to sit in like a 20-hour trading course? I would never want to sit in a 20-hour trading course. I really just tried to give you what you needed to know as quick as I could. And there it is. It's in this course. You can check it out. But yeah, let's go back to trading view. What made me start trading? I started trading by crypto. I was just super interested in Bitcoin. That's just probably the best answer I can give you. I was just interested in Bitcoin and I wanted to know how to predict where Bitcoin was going next. And that led me into looking up Bitcoin on YouTube, and some streamer named Mitch Ray ended up popping up when I looked up Bitcoin on YouTube. Decided to click on his stream. And the second I clicked on his stream, he had like 1,000 lines on his chart with all these weird indicators, and I was like, what does all that mean? And then 1 year later, I know what all of that means, and I'm able to do it very proficiently. So that's just kind of how I started, by watching Mitch Ray for a whole year. What I think of CCIV, if Lucid is confirmed, I think that's a crazy deal, but it's not confirmed yet. So we'll see what happens. Appreciate the support, Lars. I hope I blow up on YouTube. That's the goal. But I'm already very, very grateful and happy with what we have already going on here, with the almost 1,600 subscribers on the channel, which is awesome. 1K members in the Discord. It's awesome. Thank you for all the support. Even on Twitter, almost at 5K. One thing I always say, you don't have to know what the market's going to do. You have to react. Yeah, for everybody in here, BC with the $20 donation. Thank you all very much. Thank you all so much. The Bodhisattva, if that's how you pronounce it, Fab, and BC, thank you very much for the tips tonight. Really appreciate it. Just decided, it's a Friday night, and for people who want to learn more and are not doing much tonight, figured I might as well just try and help out for like an hour or so. So thank you very much, BC, for that tip and for all the tips you've sent me. I really appreciate it. Have a great weekend. Thank you very much. But yeah, what BC was just saying, which was great timing, I was literally reading your comment when you tipped. BC said, appreciate all you do, appreciate all the support you give me. Yeah, I always say it all the time, and this is kind of just me twisting Mitch Ray's words, which if you watch Mitch Ray, you're going to see a lot of similarities between what I'm doing and Mitch Ray, because I learned it all from him. That's why I have him in every single description on my streams. That's why I talk about him in every single stream, because I'm pretty much just teaching all of you what Mitch Ray taught me over a year. I know. I'm gonna watch Boiler Room tonight. Okay, Fab. I don't know if you're the person who, I think you did DM me on Twitter, telling me to watch Boiler Room, but a lot of people recommended that to me. So yeah, I'm probably just gonna watch it tonight. Appreciate the support. Scrooge says the trading course is awesome. And then finally, yeah, you don't have to know what the market is going to do. You just need to be able to react. If you could perfectly predict what the market is going to do every single day, you'd be the richest person in the world. Now, that's impossible. So stop trying to predict what the market is going to do every day. There's people that every single day, 20 minutes before the market opens, today's going to be a bearish day. Today's going to be a bullish day. Who knows? You can use probability, and that you can be correct 75% of the time, maybe even a little bit more. And you do want to be using probability. That's what all this is about. Technicals give you the probability, and fundamentals also give you probability. The news gives you probability. But you're wasting so much energy trying to do that. All you need to do is really just, understand if those things that are bad arise, that's bearish. If those things that are good arise, that's bullish. So react to what happens. Stop wasting time trying to think about what could possibly happen. Anything can possibly happen. Who knows? You were living in 2020. You know that. Let's see what else. Don't get married to a stock. Be unemotional when trading. Definitely. I was seeing somebody tweet out, when you're actually swing trading, day trading for sure, don't be emotional. But I saw somebody tweet the other day, I forgot who it was. When you're an investor, that's when you should be a little bit emotional, because that will keep you in during the tough times. You know, when you're an investor, right? The only two companies I'm technically an investor in are BurgerFi and Fisker, because I don't plan to sell them for like a decade. And I never want to sell them, I just want to own them forever. Because I truly believe in their companies and their models. I've put in many hours of research into their companies. Well, BurgerFi, not many hours, but you know, I know BurgerFi. It's not too complicated. It's a fast food restaurant, but they're just companies that I like myself. I like their teams. I like their models. I like their products. So when you're an investor, you should feel a good thing about that company. But realistically, you always want to be a realist, right? Because you're giving your money to something else. If you're going to be putting your money in something else, you should be able to understand it. I was just reading, I'll come right back 1 second. I was just reading this. The Intelligent Investor, and yeah, so as much as I love trading, I'm also trying to start taking some of those trading profits and rolling them into investments for the long term. Two people have asked about Kodak, so we can take a look at that. Mitch Ray went over Kodak on his stream tonight. I'm pretty much just going to repeat what Mitch Ray said on his stream tonight, because that's what's on the chart, right? So Kodak was actually one of my biggest trades ever. I'm not even joking. It was this trade right here. Let me go to the 4-hour. Way back right over here, there was this trade I took on Kodak. Back at the time, it was September. I was a very different trader. I didn't really fully understand risk management like I do right now, and I had a crazy big position in Kodak right over here. Thankfully it worked out and I made a good amount of money, but if it went the other way I would have lost a lot, so just do keep that in mind. But it did work out, and I made like, was this the trade? I think it was, yeah. No, I was in at like 6. It was this. Yeah, this was the trade. I entered right over here at like the double bottom, and then no, right over here. Perfect. This was it right here. 80%. This was the trade. I remember the gap as well. There was some sort of news one morning in the pre-market, and I still remember that morning. That was like my biggest morning ever at the time. I've had bigger mornings now, but this was like, at one point, this was one of my best days. This was my best day ever. This was my first like huge day in the market. That makes sense. I've had better days, but this was like the first like crazy one. Yeah, you can see what happened on this day right here, like a 63% gain. So this was one of my biggest trades on Kodak, in common shares, not even in options. And at this point, what Mitch Ray was kind of showing is the 3 rising valleys, right? Now, what does the 3 rising valleys show? Accumulation. And I can show you another great example of 3 rising valleys in a second, right? Where you have one valley, the price went up, then it sold off, but the bears could not get it all the way back down. Then you had another rally where you made a higher high, then it sold off, and the price could not come back down to the previous low. And now what you're hoping for is another move back up that will be higher than this move to confirm it. So you're seeing accumulation over a long period of time, which could send you to higher prices, and also makes it easy to manage your risk because you know you don't want to fall under this low right here. That's pretty much what is going on with Kodak right now. And then just so you can see like the highs of this pattern right here and right here, and then what you're hoping on is to get another one wherever it is. Accumulation, higher lows, higher highs, uptrend, potentially. And then you want to see like a historical example of this? Let's head on over to arguably my favorite chart, Fisker. Okay, let's go to the 1 hour. Okay, and this was it. 3 rising valleys right over here. I'm just gonna use the drawing tool, right? This was literally a trade. I'm not even joking. I put out a trade on this. Maybe some of you were in it. This was a trade. 3 rising valleys. The entry was right over here. This was the entry, and then there it was. That was the trade. So it was a great trade. And that's what can happen. On that final valley, you had the biggest movement to the upside, right? This was the final valley, right? These were your valleys, and then boom. So that just shows that over time, even on the dips, you're making a higher low, which means the bears can't get it back down to that price. Accumulation. And yeah, that answers that. I think that's gonna do it. I think it was a very strong stream. I know that not the normal amount of people were in the stream tonight because obviously the market's closed. But for the people who were here, we've had 140 people come out to the stream overall. For the 140 people who were here, congratulations, because you're putting in the work on a Friday night. And I've had many nights where I had to put in the work to get to where I am. So you taking the time out, the 1 hour out of your Friday night to learn more is going to make you a lot of money in the future. So it's really, you know, whenever the market is closed, that's when the real learning is done. That's when the real money is made, right? Technically speaking, not financially, but psychologically, right? That's where you become a better trader. So when the market's open, you can apply those things you learned. So congratulations for learning more. Congratulations for taking the time out. Thank you for hanging out with me for an hour. I hope you all have a great weekend. Yeah, enjoy your weekends. I'll be streaming again, not tomorrow, but on Sunday night. And yeah, appreciate everybody coming out to the stream. Thank you all for the tips, the likes. If you didn't hit that like button, let's get to 20 likes on the way out. And yeah, have a great night. Peace out.